We have a management with us. Union Bank reported a profit of 153 crores in the December quarter with marginal improvement in asset quality. Yatin Mota caught up with the MD and CEO Rajkiran to discuss the key highlights of the quarter gone by. So here's a slice of that chat. Let's listen in.
Our gross NPA and net NPA both on absolute terms and percentage terms has come down consistently quarter on quarter from March. And the profitability is also last 3 quarters consistently we are in profit. These heightened provisions because of the aging provisions will keep our profitability at a lower level for this year. But then with the more resolutions expected in the Q4, we expect our gross NPA number to come down substantially, and with that the aging provisions also are likely to come down, and we look forward for better profitability in 1920.
Okay, and also talking about the exposure to IL&FS, recently a lot of credit rating agencies have downgraded the SPVs and road projects also. So on an overall basis, with respect to IL&FS, what is the exposure that stands for Union Bank, which has been already classified as NPA and which is still good on the books?
Our IL&FS exposure is mostly on the thermal power project,
okay.
Major exposure. And other group companies, our exposure is hardly 200 crores, which is out of that about 50% is already NPA. So other 50% is not a big amount. But yes, thermal power plant it's a exposure which is close to 900 crores. So here it is a special purpose vehicle. As of now, it is not downgraded. So the cash flows in this account is good, which is escrowed. But because of the recent NCLT order, the money is not flowing to the loan account from the escrow account. We hope once this issue is resolved, when the NCLT order, which is expected to be modified to the extent of cash flow to the SPVs, that ring fencing of cash flows, what we are talking about, we hope this account will not slip. But then if the NCLT doesn't modify the order, the next quarter we may see this slippage of this thermal power plant.
Okay. And sir, talking about your capital adequacy ratio, in order to grow moving forward, the capital adequacy ratio is quite low. So what kind of a funding support are you requiring from the government at this point in time, and how much are you hopeful to get before March of this financial year?
Yeah, we are expecting a good capitalization during the Q4 of this year. It is very difficult to quantify and put a number. We have requested the government and given our calculations. We expect a good amount of capital in the Q4. I will not be able to give a number on that.
Okay. And sir,
that will help our growth.
Okay. And sir, talking about SR Steel, as an account, what kind of a receivable are you looking to garner after a lot of restructuring and payment has happened? So what exactly is the exposure to SR Steel, and how much will you be able to recover from that account?
Yeah, SR Steel exposure of our bank is in the public domain. It is in the range of roughly about 2,000 crores.
Okay.
And the settlement what is offered is also reasonably good, and this would have given us some good amount of provision right back also. So we are expecting that this account will be resolved in Q4, and it will substantially improve our profitability because of the provision right back, and substantially bring down the gross and net NPA number.
Okay. And sir, one word on the credit costs. This quarter it has been lower, but what is the outlook moving ahead? How do you really see credit costs shaping up for Union Bank?
The credit cost was a bit high actually in the first 3 quarters. So I think this year this trend will be maintained. So we hope that it will be around 3.5. So for this quarter, for this year.
And sir, one final word on how really do you see your asset quality moving by March 19? If you could give some guidance on your slippages and gross and net NPA ratios, how do you target them to be by the next 1 or 2 quarters?
Actually, if you look at this quarter slippages, out of the 2,900 crores, 700 crores came from the existing old NPA accounts, where the non-fund based limits got crystallized, particularly SBLC, LC and some BGs. So if you take that out, the slippages were around 2,200 crores. And out of that, 1,500 crores came from the RAM sector. So if you really look at it, the slippage in the corporate sector has really moderated and come down. We expect that trend to continue, and going forward, maybe we'll see some stress in the RAM sector in the next quarter also. So we expect the slippage number will be much lower than the present quarter number for the next quarter.